Hello everyone, welcome back to Banking and Finance with Chitrak. Today we will discuss the MCQs of the customer identification procedure and the risk management, which is the second chapter of the KYC module. So let's begin with the first question. What is the fundamental basis of KYC and AML measures? So what are the options? Marketing new financial products to customers, dealing with genuine customers, customer identification and customer due diligence, reducing the overall number of banking transactions, automating all customer service interactions. And the answer will be B. Dealing with the genuine customers and customer identification and customer due diligence. The next question. According to the RBI's definition for KYC, a customer is a person who has only one type of financial product with the bank. Second option, only the individual who directly conducts the financial transaction. C, a person engaged in a financial transaction or activity with a reporting entity and a person on whose behalf the transaction is acting. And number D, any person providing identification documents to the bank regardless of transaction. And the answer is option C. Third question, which of the following is not explicitly included in the definition of a person under the PML Act for KYC purposes? A company, a Hindu undivided family, a temporary visitor without any financial engagement, or D, an individual? The answer is C, a temporary visitor without any financial engagement is not included in the definition of a person under the Prevention of Money Laundering Act. Next question. For a company, a natural person is considered a beneficial owner if they have ownership or entitlement to capital or profits or control exceeding what threshold? The options are A, less than 10%, B, more than 25%, C, exactly 15%, or D, any amount if they are a board member. The answer is B, more than 25%. Now, remember, in the case of a partnership firm, the threshold value should be more than 15%. In case of unincorporated association or body of individuals, it has to be more than 15%. Also, in case of a trust, it has to be more than 15%. So, only in case of a company, it will be more than 25%. The fifth question, in the context of a partnership firm, what is the ownership or entitlement threshold for a natural person to be considered a beneficial owner? I said it just now, it has to be option number C, more than 15%. The sixth question, if no natural person is identified as a beneficial owner for an entity after examining its holding structure, who is then treated as the beneficial owner? The options are A, an external legal consultant, B, the entity's accountant, C, the senior managing official of the entity, or D, a randomly selected director. The answer is C, a senior management official of the entity. Next question, which of the following is not listed as a category of beneficial owner for a trust? The options author, trustee, beneficiaries with interest, and independent financial advisor appointed by the bank. And the answer is D, an independent financial advisor is not listed as a category of BO for a trust. The next question, ABC Limited is a wholly owned subsidiary of PQR. Now A, B, D and E are identified as BO or beneficial owner of PQR Limited. So who are considered the beneficial owner of ABC Limited? The options are only PQR Limited, and as it's the sole shareholder, B, Mr. A, B, D and E, C, the board members of ABC, and D, the CEO of ABC Limited. The answer is B, all of Mr. A, Mr. B, Mr. D and Miss E, as they are also the owner of PQR, and as ABC is a subsidiary of PQR, then automatically they are also the owner of ABC. Next question, what are the two primary purposes of customer identification procedures? A, to expand market research and generate leads. B, to streamline internal operations and reduce paperwork. C, to satisfy the genuine identity of the customer and mitigate the risks of money laundering and terrorist financing. D, to assess customer satisfaction and improve the service quality. So the answer is obviously C, to satisfy the genuine identity of the customer and mitigate the risk of money laundering or terrorist financing. Next question, which of the following is not listed as a principal element of customer identification? Number A, identifying and verifying the customer and the beneficial owner. B, obtaining sufficient information to establish identity. C, conducting a credit background check of the customer. And D, asserting the purpose of the intended nature of the banking relationship. The answer is C. The next question, which of the following documents is not considered as an officially valid document or OVD for KYC purposes? A, a recent utility bill addressed to the customer. B, a valid driving license. C, a voter ID card. Or D, a PAN PAN card or permanent account number? The answer is A. A utility bill addressed to the customer is not a officially valid document, as in which acts both as identity and address proof, but it can be used in the cases of only address proof for certain types of accounts, and also when the address is not updated in your valid OVDs, it can be used temporarily. Do check out the explanation of the chapter and you will get a detailed idea regarding this. Next question. What specific information is electronically transferred from UIDAI to banks or businesses correspondents for eKYC? Now, the options are credit history and financial transactions, family history and employment details, name, age, gender and photograph, or D, income tax returns and asset declaration. The answer is C. Next, for joint accounts, what is the KYC requirement? A. KYC is required only for the primary account holder. B. KYC needs to be taken for each applicant. C. KYC is not required if one applicant has an existing account. Or D. A single KYC document from any of the applicants is sufficient. So the answer is B. KYC needs to be taken for each of the applicants. The next question. When a third party is used for document collection and verification, what is the crucial requirement regarding the third party? The options are A. There must be a non-profit organization. B. They must have their headquarters in the same country as the bank. C. They must be regulated, supervised or monitored. And D. They must have been business for at least 10 years. The answer is C. They must be regulated, supervised or monitored. The next question. What is the primary objective of implementing a risk-based approach or RBA for KYC AML? The options are A. To minimize the time spent on customer onboarding. B. To reduce the number of financial products offered. C. To mitigate money laundering and terrorist financing risks. D. To standardize banking fees across all customer segments. The answer is again C. To mitigate the money laundering and terrorist financing risks. Next question. Which of the following is identified as a factor impacting both ML and TF risks? A. The bank's marketing budget. B. The number of bank branches in a region. C. The bank's annual profit margins. Or D. Delivery channels. The answer is D. Delivery channels. So, what are the basic three types of factor which impacts the money laundering and terrorist financing risks? One is this delivery channel, the other is the product risk, and another one is customer risk. Now, the next question. What are the minimum categories for customer risk classification? A. Only one category, standard. B. Two categories, high and low. C. Three categories, low, medium and high. And number D. Five categories based on financial net worth. The answer is C. Three categories. Next question. Which of the following is a parameter used to determine a customer's risk category? A. Customer's preferred communication method. B. Financial parameters like expected annual income. C. Customer's feedback on bank services. Or D. The customer's social media presence. The answer is B. Financial parameters or like expected annual income. The question number 19. Which of the following customer types is generally categorized as a low risk customer? The options here given are real estate agents, diamond merchants, housewives, or politically exposed persons. The answer is C. Housewives. Now, diamond merchants and politically exposed persons are of high risk category and real estate agents are of medium risk category. The next question. Promoters of corporate groups and politically exposed persons are generally classified under which risk category? A. Low risk customers. B. Medium risk customers. C. Unspecified risk category. Or D. High risk customer. Like I said, both of them are high risk customers. Next question. A diamond dollar account is classified under which product risk category? Low, medium, high. Not categorized, it's high. Next, which of the following is explicitly listed as a mode of sourcing customers? A. Direct sales agents. B. Public relation campaigns. C. Television advertisement. Or D. Employee referrals. The answer is A. Direct sales agents. Next question. What is the suggested risk category for the branch delivery channel? High, medium, low or moderate? The answer is low. Next question. For which customer risk category is simplified due diligence typically applied? For high risk customers, low risk customers, medium risk customers, or all customers are equally categorized? The answer is for low risk customers. So basically there are three types of risk categories: simple due diligence, basic or normal due diligence, and enhanced due diligence. For low risk customers, SDD is applied. For medium risks, basic or normal due diligence, and for high risk customers, the enhanced due diligence is applied. Next question. Now this is the situation. First, A bank is initiating an account-based relationship with a new customer, Miss Ria. As part of the process, the bank collects her identity documents, verifies them, and inquires about the purpose of her intended banking relationship. So the question is, what are the two primary purposes the bank aims to achieve through this customer identification procedure as outlined in the sources or in the chapter? So the options are to facilitate quick transaction and reduce processing fees, to improve customer satisfaction and streamline internal operations, C, to satisfy the genuine identity of the customer and mitigate the risk of money laundering and terrorist financing, and D, to expand the bank's customer base and promote new financial products. The answer is C, to satisfy the genuine identity of the customer and to reduce the risks. Next question. Mr. and Mrs. Agarwal approached a bank to open a new joint savings account. Both individuals are new customers to the bank and have no prior relationship with it. So the question is, according to the KYC requirements for joint accounts, what is the bank obliged to do regarding the customer identification? A. Obtain the KYC only for the primary applicant Mr. Agarwal. Obtain a single set of KYC documents from either Mr. or Mrs. Agarwal. Waive the KYC requirement for joint accounts if both individuals are present. Or take KYC for each applicant, meaning both Mr. and Mrs. Agarwal must complete their KYC process. So you know the answer is D. Next question. A bank is categorizing its customer based on their money laundering and terrorist financing risk profiles. It has been identified three distinct customer types: a retired pensioner living on a fixed income, a restaurant owner, and a diamond merchant. So how would these customers typically be classified in the terms of money laundering and terrorist financing risks? So the options are given, like for a retired person should be high, or restaurant owner should be medium, like this. The answer is going to be C. The retired pensioner is low category risk, restaurant owner is medium category risk, and the diamond merchant is high category risk. Next question. A bank offers various financial products. It is assessing the inherent money laundering and terrorist financing risk associated with a standard term loan against assets, a non-resident fixed deposit, and a cash credit account. So, how are these products categorized in terms of money laundering and terrorist financing risks? Here is also a different categories are given for each loans. So, the answer is B. Term loan low, non-resident fixed deposit medium, and cash credit high. The next question. The compliance department is deciding the level of customer due diligence to apply to different customers. They have classified Mr. David as a low risk customer, Ms. Sarah as a high risk customer due to her involvement in a complex international trade business. So, what type of customer due diligence is typically applied to Mr. David and Ms. Sarah based on their risk categorization? We also discussed this a few moments earlier. Different types of due diligence is given here. And basically, the answer is going to be C. Mr. David will have simplified due diligence as he is a low risk customer, and Ms. Sarah will have an enhanced due diligence as she is a high risk customer. The last question of this chapter. A bank customer, Ms. Gita, was classified as a medium risk customer when she opened her account 7 years ago. Her banking activities have remained consistent with her original risk profile. So, according to the prescribed periodic KYC updation timelines, when is Ms. Gita's next KYC updation typically due? So the options are every year regardless of risk category, every 2 years from the last update, every 8 years from the date of account opening or last KYC update, and D, every 10 years as she is not a high risk customer. The answer is going to be C, every years from the date of account opening or last KYC updation. Remember, both high, medium and low risk has different periodicity to renew or update the KYCs. The timeline for high risk customers is 2 years, for medium risks is 8 years, and for low risk customers you need the update after 10 years, and the update can be from the date of the account opening or the last KYC updation. So that is it for the MCQs of this chapter. I hope it was useful to you, and if you have liked it, please share it with your colleagues and subscribe my channel, and do leave comments if you have any queries regarding these questions. Also, if you want the notes of this chapter, do fill up the form in the description box and the comment box given below. Thank you. All the best for your exam.